Welcome back to Winning on Taxes, and we're talking specifically about hardship statuses. What are they? How can they help you out? And what's going on with the different states? So we've talked about how the IRS hardship status lasts for 2 years. As long as you file your taxes on time and pay your taxes, you don't owe again moving forward. You can stay in that status sometimes indefinitely until the tax debt expires and goes away. Now, with states, it's a little different. Now, states vary across the country. A lot of states don't even have income taxes, and some have hardship programs, others don't. So we're going to jump to a website there. This is publicintegrity.org at the Center for Public Integrity. And here it talks about the difference between state income taxes and IRS taxes. Now, this is not a site. The people that did this are not tax professionals. You can tell just by how they wrote this, but it is good information. So they reached out to all 41 states with individual income taxes. Those that don't have income taxes, they skipped over. And they got details on 37 different states. And then they also included Washington, D.C. in there as well. So New York offered a perplexing no comment. They don't have a hardship status. And if they didn't have one, that's why they got a very confusing response on the ones that don't have a hardship status. Others got very clear information. Again, talk to a tax professional that regularly deals with different states, but they explain how different states work. So again, they have a list of all the different states that they covered from Alabama to Wyoming, and it just breaks it down pretty nicely. Alaska, no individual tax, they didn't cover it. And there are other taxes, though, you might need a hardship status for besides just individual taxes. Arizona, I'm going to apply for a hold, and earlier in the show, we talked about the difference between a temporary hold and an actual hardship status. Arizona does not do a hardship status. So they'll put you in a short hold while you prepare your taxes, while you get something else together. But in a fairly quick timeline, they want an installment agreement, and they want an installment agreement to pay the balance. Arkansas has an offer and compromise program. You can work out a payment plan, but they don't have a true hardship program. California has one of the best hardship programs out there. Their offer and compromise program is horrible, but they have one of the best hardship programs out there out of all the states. So it really depends on the state. And this is why it's so important to talk to a tax professional, get the breakdown of what's happening in your state, and you might be dealing with multiple states. Don't forget about that. If you lived in one state and accrued some tax debt and then went somewhere else and had some more tax debt pop up, you might have multiple states that you have to deal with. I've dealt with 5 to 6 states. I think my most was 5 in one case, where we had to contact each state, get the information, and work it out for each different state. So anywhere where you either had a residence or you filed tax in that state, or if you had a business and you created a business, registered your business with the Secretary of State, you need to address that when you're closing that business down or closing down your filing requirement in that state. States are really good at going and filing for you and assuming you had income that you probably didn't have. So just because you might not qualify for a hardship status, there are plenty of other great options as well. One of them is for many states, but also especially the IRS, is what's called a partial pay installment agreement. And I've had cases where I put them on $20 to $50 a month in payments. One case, it was a $200 a month payment on an $800,000 debt. That $800,000 was going to expire well before they paid hardly anything on the debt. So that was a great resolution for them. They were retired. on a fixed income, and it was a godsend to them for them because there was no way they were going to be able to pay this huge tax debt that was owed. So it's rule of thumb, it's always to pay off state debt first and then get a better resolution with the IRS. The IRS will give you credit for part, if not all of the IRS payment, or credit for all or part of the state payments that you're making if you're on an installment agreement. The state's debt lasts longer, 20 to 30 years, and they're a lot more aggressive when it comes to collections. So in general, pay off the states. Let's set up a better resolution with the IRS, and the balances are usually much higher with the IRS as well. So stay tuned, and we'll come back to wrap up this session or this episode right after this break.